So one of my YouTube subscribers has asked me to make a video on Dixon technologies. Dixon, as you know, is my all-time favorite stock. But even an all-time favorite stock, when it crosses base three, it becomes volatile. And as you know, I recently bought it and sold it. I have made a video on why I bought the stock at a particular price. I also made another follow-up video on why did I sell Dixon at the particular price. And we will see where the stock is currently and is there an opportunity to re-enter. How am I looking at the stock? Okay. And by the way, all my videos are educational videos. Please don't take this as some recommendation or something. I am not a SEBI registered analyst. Okay. I don't provide advice. I don't have social media account. I don't have WhatsApp group. I don't have any Telegram channel. I have nothing. Okay. It's just YouTube channel and some little podcast which hardly anyone listens to. Okay. So that's my story. So it's just YouTube channel that this is where I am. So let's go to Dixon Technologies. So have a look at these notes that I had made. And I had bought the stock on this day, 28th of November. I have made a detailed half an hour video explaining what was I looking for when I bought the stock here. These are the factors I was looking for. Then the stock went up, created a rising window here, created another rising window here. The rising window was broken somewhere here, and that's where I sold the stock with a 13.01% gain. And by the way, this was base 3. Remember, base number 3 is a tradable base. It is not an investable base. Base 1 and 2 is an investable base. Okay. A tradable base means when the stock goes up 20-25%, that's when it starts to form another base or starts to decline from there. Okay. So from base 3, it is usually a good idea to take all of your profits at 20-25%, that particular range. In this case, I took profit much earlier, even halfway through the distance, because 13% is half of 25-26%. The reason why I booked my gain halfway through is because of that the window was broken. The rising window was broken, right? That's a dangerous sign. And look what happened after I sold. My selling price is 17,876.40. My buying price was 15,817.75. And look where the stock went. After I sold the stock, this pink line you see, that's my selling price. From there, it went down another 12%. So if I had not sold the stock, I would have been down 12%. Now the stock seems to be recovering. A good news is that there is a falling window here. That's bad news, but a good news is that it is going back up above the blue line, which is the 50-day simple moving average. Plus, it might close this falling window. Closure of a falling window is a very good sign, especially if it happens on above average volume. So today's day is very crucial. I will watch the day today. If it closes above this 50-day simple moving average, it closes the falling window and the volume is above the blue line here. That's very positive for the stock. It might start to create another base. Well, that doesn't mean I'm going to buy. I will have to wait for the base to complete, something like this. So let me draw it for you. So this is point number 1. Now the base has started. Point number 1, point 2, then 3, 4, 5, 6, 7, 8. If the stock makes that kind of a movement, then this point number 7 could probably become my buy point, and that could come somewhere around February. So okay, so in by February, around mid February, so I might think of getting into the stock, provided it gives me the kind of price action that I am looking for. Until that happens, I am not interested in the stock, no matter how great the fundamentals are, no matter how great the comparatives are. Unless the stock sets up technically well, I am not interested in the stock. In Mark Minervini's book, it is clearly written that no matter how great the sales growth, EPS growth, ROE, and margin of the company, no matter how great it is, if the technical VCP setup is not there, he will never buy that stock. VCP is volatility contraction pattern, where you see contraction in the price, you see contraction in the volume, and then you catch the proper buy point. As the stock is breaking out of that buy point, you start taking that position within 1% distance from that buy point, so that you don't end up buying an extended stock. Remember, this stock has not gone up like 20% above its buy point. So let's measure it. So the yellow line was the buy point. Yeah, it has gone up 20%. So probably we can consider this as uh, base number 4. It's setting up another base now. Ideally, I would look for 25%. But in this case, I would consider this as base number 4. So the base is the rally or the uptrend in the stock is becoming more and more obvious. Okay, it's not like the stock is in stage 1 or sorry, base 1 or base 2. So if I go back, see, the uptrend, the stage 2 uptrend started way back in September 2023. Now we are in 2025. So past 1 year, the stock has been continuously going up. So we are not buying the stock early. Okay, we are buying it late. If at all we buy the stock. And by the way, if the stock completes this kind of price action and the market conditions remain weak, I might not even take the position. Okay. And even if I take the position, assuming the market conditions are good, I might take half position or some small position size to control my risk, because I know that I'm buying late. It is very obvious. So generally, when you buy late, the stock becomes more volatile. So you will see squat candles coming there. And these numbers, by the way, they don't change overnight because you need quarterly reports to come. So if we go to Market Smith, let's go to Dixon. And by the way, Dixon has a red flag on the stock. If this red flag continues to persist, then anyways, I'm not going to buy the stock. It's very obvious. I don't buy stocks which have a red flag on them. Okay. Now I don't look at why there is a red flag here. There is a reason. See, it is under ASM list. So it is surveillance. It is under surveillance by National Stock Exchange. As long as there is a red flag, I'm not interested in the stock. By the time it creates another base, if that red flag goes away, I might think of buying the stock. Let's see what happens. Let's give it a month or so. Okay. That is how I wait. This is called the value of patience. Sometimes you have to wait for 3 weeks, 4 weeks to wait for a stock to give you a proper setup. It's like, as per my understanding measurements, okay, somewhere around after mid February, we might get some positive opening there, like low risk entry point, but not immediately. You have to give the stock some time. Okay. If I click on consolidated, see, relative strength still remains 90. Group rank continues to decline. I think it was 70. Now it is 81. When I bought the stock, I remember it was 70. See, it was 70 here, continues to decline. So comparatively, it doesn't look great. Fundamentally, it's a fantastic company. We all know positive growth in EPS annual last 3 years, triple digit EPS growth, triple digit sales growth, high return on equity. I think margins are at all time high. No, margins are not at all time high, but it's okay. We don't even need to look at margins as long as the return on equity is more than 17%. Okay. So comparatively not very strong, fundamentally very strong. Liquidity is very high because the stock trades more than 200,000 shares per day on average. So the liquidity is very high. It's not a penny stock. So the price is roughly around 17, 18,000. Not a penny stock by any means. So liquidity analysis, comparative analysis, fundamental analysis, technical analysis is where the stock fails. And as far as market analysis is concerned, well, as you know, the market conditions, Market Smith has declared that now the market is in a downtrend. This is a confirmed downtrend. If I click here, they tell you that no fresh positions. See, investors should avoid new purchases, get off margin, and raise cash. So 50 to 75% of the portfolio should be on cash, right? In these kind of market conditions. So there is no question of buying Dixon, but I have analyzed the chart for you. Okay. Now you know what I am looking for. Now you know what I expect from the stock. And if the stock delivers what I expect from it, comparatively, technically, fundamentally, and liquidity wise, if the stock delivers, okay, what I expect from it, then it's like that orange that I'm looking for from the fruit basket. Okay, actually, I should call my trading system the orange trading system. I should give a name to my trading system, although it is derived from William O'Neill and Mark Minervini's material, but this is not my original thinking. Okay, the points counting is my original thinking. You will not find that in any book. The number of candles in the base, the points counting, these things, these are my original ideas. These are not given in William O'Neill's or Mark Minervini's book. Okay, but if I were to give a name to my trading system, I would say I would call it the orange trading system, because I am picking oranges from the fruit basket. Orange represents a stock, a particular kind of a stock that I'm looking for, which displays the characteristics of a leader. So they say if you want to become a successful person, you need to have the same habits that a successful person has. Similarly, if you want to buy a leading stock, then you have to look for a stock which is showing characteristics of a leading stock. It's as simple as that. And this is what I'm looking for. Okay. And even if I buy here, I might go in with a small position size. And even if I go with a small position size, I might look for a quick 20-25% gain from that base. And if I see something like falling window happening while the stock is going up, then I might be out, just like I was out here, yeah, in double digit. I will take a double digit gain in 2 to 4 weeks if I'm getting that. And if I'm noticing weakness in the stock, which I expect to happen because we are buying it late. Okay. Now there is something called as base failure. Okay. Base failure means, see, this was the base. You see, this is the base, but actually it started from here. If you see from here till here, this area is the base. So when this low, or probably this low, gets taken out, or this low gets taken out, we can say that the base has reset. I would consider this particular low. Okay. When the stock falls enough that this low gets taken out, that is when we say that the base has reset. So instead of base 3, base 4, now you start with, this becomes base 1. Now that is likely to happen if the Nifty falls more than 20%. So if you look at the Nifty, the index has fallen like 12 to 14% from the top. If the index falls more than 20%, that's officially a bear market. Okay. If it falls less than 20%, that's called an intermediate decline. So there is a difference between intermediate decline and bear market. As far as my understanding is concerned, if the Nifty falls more than 20% from this level, we might probably see Dixon falling and breaking that previous base low. So going back to this, if Nifty crashes more than 20% from its top, then this might also show some weakness and undercut this low. That is when the base resetting will happen. And base resetting is a very good uh, sign, because now you are buying it at base 1. Now suddenly this becomes base 1, not base 4. Okay. Now suddenly you are buying the stock at in early stage. Now you can go in with a bigger position size, because now you are buying the stock early, even though it has had a great run in the past 1 year. The entire thing has got reset. So there is something called as base failure, and there is something called as pivot point failure. Okay. Pivot point failure is when the stock breaks out of a pivot point here and then comes back into the base, which happened with Blue Star, by the way. I made a video. So see, there's a pivot point here. It goes up, breaks the pivot point on the upside, comes back inside the base. Okay, so that's called as a pivot point failure. The base has not yet failed because the blue, green, red is still intact and this low has not yet been undercut. If the price closes or just even if undercuts this low, that is when we say that the entire base has been reset. Okay, so there is a difference between base failure, and there is a difference between base failure and pivot failure. Pivot failure means The base is still intact, the uptrend is still intact, but the buy point has failed. Okay. And base failure means the entire base, the low of the base has been undercut and you have to restart the counting of the base. So, anyways, that was my little lecture on base counting, early stage, late stage, market conditions. These are the things that you have to pay attention to if you are a positional trader or a swing trader. And by the way, if you look at current market condition, it's in a downtrend. Obviously, we don't take a swing trade or a positional trade in a downtrend. So this is the time to relax. Okay, I'm not taking any trades. As you know, by the end of just a second, I will show you. I came on 100% cash by this day, somewhere around just before New Year, like 5 days before New Year, just before Christmas, I was in 100% cash. And if you notice, after Christmas, okay, the Nifty, the Indian market has lost the market capitalization of roughly 15 lakh crore. Okay, so this is the value of education. I am so grateful to people like William O'Neill and Mark Minervini that whatever I learned from them, I'm able to apply it directly in the market and come out 5 days before the market has lost 15 lakh crore in 3 days. You know, market has lost 15 lakh crore market capitalization in 3 to 4 days. And 7 days ago, or 5 to 7 days ago, I was out in complete cash in my portfolio. That is the value of education. Education will keep us away from trouble in the stock market. Take care.